For our next conversation, How to Start Your Own Investing Vehicle, please welcome moderator Alexandra Wilson, editor Forbes Under 30, and panelists Peter Boyce II, founder and managing partner, Stellation Capital, and Pilar Johnson, co-founder and managing partner, Debut Capital.
Well, first, hi, everyone. You've made it. We're almost there. Thank you so much for joining us and keeping the energy great, as well as obviously the people at home watching. So I guess just to start off, tell me a bit about your firms and why you guys decided to, strike it out on your own.
Totally, I'll get things kicked off, and it's great to see everyone. I spent 8 years as a partner at General Catalyst, where I was lucky to work with incredible student entrepreneurs, incredible early stage entrepreneurs, and learned a tremendous amount. I really grew up there. But I ultimately felt there was such an exciting opportunity to follow in the footsteps of mentors and advisors and founders that I really respect and admire. And so I decided to kind of chart out on my own. So Stellation Capital is me as a solo GP investing in pre-seed and seed companies with a $40 million fund. And I'm very lucky to work with a number of founders that are here.
Awesome, yeah. I'm Pilar, co-founder at Debut Capital. Prior to Debut Capital, I actually come more from an operations background. I worked at a company called Prolific Interactive, and so during my time at Prolific, I worked really closely on the diversity initiative while there, and so that really took me to different conferences like AdColor, Afrotech, Black in Tech, and time again, I was seeing the same thing. Amazing founders, solid vision, brilliant strategy, all struggling to raise capital. And so when we sold Prolific in 2019, I really felt like the next whatever I was working on next, I really wanted the opportunity to work with more people that look like me and support people that look like me. And so we officially kicked off Debut Capital January of 2020, and we're investing in Black, Latinx, and Indigenous founders in the pre-seed, seed stage, some Series A.
Nice. So I was talking to some founders last night, and when you're thinking about, who's going to lead your round, who's going to be their, venture capital partner, there is this pressure to go with those big names like the Andreessens and all of those, but it is sort of a different experience when you have a large firm that has all these companies they're supporting. What do you see, especially Peter, you've been on both sides of that. Yeah. What's the difference in the relationship with the founders that you work with?
Yeah, totally. This is something that I very much am living right now. I think a few things. One is, I'm going to be doing this for the next 30 years. So, for me, every investment and every founder I work with is deeply important. Like, I want their business to really work out. So the level of alignment and kind of reliance on each other is very high. I'm not ready to retire next year. So that's one. Two is, now as the founder of a venture firm myself, I have a new level of empathy and appreciation and respect for what it takes to found a company. And so I think it's really powerful to be able to kind of sit across the table from a founder as the founder of my own firm. And I think that alignment and understanding and connectivity and kind of mutual respect is something that's really powerful. And then the third is, I'm one person, you can just text me. And so one of the things that's really fun is I'm just literally always kind of texting back and forth with my founders because I don't have a talent partner, I don't have a marketing partner. This is like a what you see is what you get type of firm. And so I really cherish that relationship with the entrepreneurs I work with.
Yeah, I can definitely agree on that. Being a co-founder with an operator experience that really provides my unique value add for the founders. I think that even though when we first got started with our personal capital, our check sizes were on the smaller side, but we really wanted to just provide that sweat equity and get our hands dirty and provide value add. And so a lot of times when we're meeting with our amazing founders, they've been bootstrapping it on their own for the first few years, and now they're maybe at the stage where they're ready to make their first hire, and it's like, what goes into that? And so fortunately, we have all this expertise and experience from our time at Prolific that we're able to really provide that value add and package that up and say, hey, you don't need to really lose sleep at night over this part because here it goes, here's the best practices in hiring and the best way to go about interviewing. So just really to answer your question, I think the when you are a new early stage fund, you really have that opportunity to build a genuine relationship with the founders and provide a value add beyond just writing a check and saying good luck.
Yeah, and functionally, when you're, going out and building these million-dollar funds, what's it like pitching individuals and getting them, to come in as LPs and trust you with their money?
Again, this is, I think, another one of those moments where I think you can empathize with every founder that then kind of pitches you. It can be it's an incredible learning experience, and it's a very humbling experience to kind of, present yourself in the process of raising from LPs. I chose to work specifically with institutional LPs because I wanted to represent, nonprofits and missions that I care deeply about. A lot of the capital that I represent is going to go to funding scholarships and health research. And so I really love that, bearing that mission. It inspires me in a way. And so, but, you've got to polish your deck, you've got to kind of practice and rehearse. And so, it's been nice to, kind of sit in that experience and learn from that, because I think I now have an even more profound appreciation from when founders are, pitching me and thinking about the follow-up and the feedback, and that whole relationship is something that you end up having, when you are a manager of your own fund.
Yeah, I agree with that. I think when we were, decided to raise our first fund, I really felt for the founders. I understand that struggle of like getting on the call and having to have your deck ready. And I'm such an introvert. I did not want to pitch. My co-founder really had to drag me on those calls. And so when I am meeting with the founder, my job is to just make them feel comfortable on the call, because I literally know how it feels to be, on the other side of that, pitching to a potential LP and having to get them excited about what Debut is working on.
So for the founders in this room, now raising capital, what are sort of the do's and don'ts of pitching? Do you have any particularly memorable ones, whether good or bad?
Lots of thoughts. I think that having beautifully designed materials, I think, is kind of one of the first ways to reflect your level of intentionality and kind of commitment to your work. So that's one. And this is coming from someone who's, I polished my fundraising deck. So that's one. I think the second is finding moments to establish kind of personal connectivity. I think that's one of the things that I've truly enjoyed in both my LP relationships, but also founder relationships. So find those kind of moments to kind of create personal connectivity, whether it's, where you grew up, or a passion for sneakers, or, just whatever that kind of commonality you can kind of draw out to make it personal, I think is really powerful, because it creates a kind of a more comfortable and relatable context. And then I think the third is, rally and activate the community of folks around you as well. So if you have a friend who you think may be a founder that I know, have them send a text, you know what I mean, or an email to me. Just kind of do as much as you can to help, create this sense that, there are lots of people in your life that want to see you succeed and want to see you kind of get the investment to kind of realize your dream. And so, don't be afraid to kind of activate that network. And it could be a classmate, family, friend, someone that you worked with. Because I think those kind of proof points go a long way.
Solid advice. I agree. I love a beautiful deck. I really think that, use your network to share the drafts that you have created, just so that you get that feedback before you're going into the meeting with the potential investor. Also, I think, what excites me when I'm on a call with a potential portfolio company is I want to know like your personal story too. Why is this product that you're building, or the service you're creating, why is that such a passion for you? So I think, kind of tweaking and tightening that story is so important to getting investors sold and totally bought in on your vision.
Are there any common mistakes you guys see or red flags that come up?
Yeah, I think not taking the opportunity to kind of express your personal connection to the problem space. So I think that's that's a really good example. Like if we've gotten through the conversation and it's kind of like, there's 2 minutes left and it's like, well, remind me why you're so deeply committed to doing this work. So I think that's a great way to start. to make sure that's covered. I think being kind of overly aggressive, there's a subtle balance, but I think this, when you're kind of like, oh, and by the way, I'm gonna make a decision, you know what I mean? Like in the next 48 hours, I need to know if you're in or you're out, and I'm chatting with this, and you know what I mean? Like that. There's a subtle kind of dance to do, but that's a flag, for me, because I think, those gestures really do, I think, a lot to kind of signal what the ongoing relationship is going to be, and when investments work out, you're typically working together for 8, 10, 12 years, and so taking those moments to kind of just relate to each other, I think, is really important.
Yeah, I think one thing I would add is understanding the market, understanding your market, and understanding and having an answer to what you're bringing that's lacking in that market is something that investors want to hear and feel confident that, okay, they have done their research, they understand their business strategy.
So a lot of founders here are sort of at the phase where, they do have some capital to play with and they're starting to think about angel investing. What would be your advice to those individuals as they start, thinking through investing and how to approach it?
Yeah, I think it's number one. I think it's important to try to kind of triangulate kind of different sources of kind of information and trust, so that you can, I think investing in people that you've known for a very long time is a fantastic place to start. I think making sure to trade notes with other investors, I think, is also important. So not going it alone, but finding other folks that you can trade notes with and get access to their thinking so that you can make better investment decisions, I think, is really important. So I think one of the things that's most excited about the opportunity to do any kind of angel investments is you get to form a relationship with the founder that you're supporting, but then you also get to form a relationship with all the other investors in the syndicate, and there can be lots of learnings and lots of kind of collaboration opportunities down the road. I mean, I love trading notes with friends that are angel investors, a number of operators, and kind of, former founders and CEOs, then want to kind of pay it forward and kind of angel invest and mentor, future entrepreneurs. And so I think it's it's also just an incredible way to learn. And even if you're a founder, you can get insights about your own business from the angel investments you're making.
Yeah, I think my advice would be do it. Especially to my Black, Latinx, and Indigenous founders out there. I feel like a lot of times we all, might deal with imposter syndrome and feel like, oh, I need to wait till I have $1 million in my bank account to be able to write a check, or I need to have all these degrees from a business school in order to do it. But I would say just do it. I think that check, no matter the size, matters, especially if you're a founder, you're an operator, and that perspective is unique and it's needed because traditional VC is predominantly white and male, and it's just needed. So whatever, release that imposter syndrome if you got it, and write the check.
So yeah, when you're thinking through, if somebody in this room or viewing online is thinking about, should I start my own firm or should I move to a different VC firm? What would be your advice to those individuals? Like, what is the risk of, striking it out on your own and trying to make a name for yourself?
Yeah, I feel like I've had that conversation a few times over the past kind of 2 days here at the conference, which has been fun. Look, I think worst case scenario, you end up going and joining another firm, right? So so there isn't really, I think, a tremendous amount of downside. And I think, for me, if you think long term, and if you think about the way that you want to craft your identity and your impact over 10, 20, and 30-year time frames, the opportunity to found your own firm and kind of uniquely contribute is something that's really exciting. So I think that's great. I think learning is the key framework that I would kind of, ask folks to prioritize. And so, if you're going to join a firm, optimize for the people and optimize for the learning, because that's something, I feel very lucky to carry forward given my, time at General Catalyst. And so, for folks that feel like there's still more learning to do, I think that's when joining a firm is incredible, because you have partners and other people that you can learn from and improve, and then in the future go out on your own.
Yeah, I think I had a little bit of a different path from you, Peter, of just getting started. And I think that there was plenty of learnings and continues to be a lot of learnings as I go. And so I guess my one thing to say would be there's so many paths to get into, venture capital, and there's not one right way. So
Awesome. Well, I think that's a great way to end it. Thank you guys so much for joining me.
thank you.
Thank you.